Alright, cool. So let's take it from the top. Do we want to go over the dollar? Yeah, let's go over the dollar actually. So we'll start with dollar, then we'll go NQ, BTC. Maybe we can do ETH because I know some people that sent in some charts. They were looking at ETH. We can do Sol, gold. Anything else that you guys are gonna want to look at? Let me know now and I'll add it to the watch list and then we can go over it when we get to it. I don't know if anyone's still trading hype or someone's still trying to look at fart coin. I should have died though, not gonna lie. At least last time I checked it. Yeah, we'll put Tau in there. We'll put hype too, just because from that last call out kind of got me interested. Is this the chart where we're using? Yeah, it is. Okay, cool. Anything else? Any other assets, guys? All right, cool. Ada, we got a Cardano fan in here. I've not looked at this chart in a long time. Got some really old notes back here, back in 2024. Maybe we could take a look at those too. Yeah, does it? I mean, this chart looks fucking scary, bro. Dude, I know, right? That's pretty crazy work. On God they do, bro. On God they do. Alright, cool. So, per usual, guys, we're gonna make sure we zoom in. We eliminate a lot of the extra information that's not really relevant to us on that chart. Um, and remember, if you guys weren't here for when we talked about this, the reason that we look at the dollar index is not because we trade the dollar index, but we want to have a good feel for where dollar is going because simply put, if the dollar goes higher, risk on assets such as NQ, and BTC, what else? We'll just leave it at that. Risk on assets like that go down. Okay, so they have an inverse correlation, right? If the dollar goes higher, or if the dollar goes lower, sorry, risk on assets go higher. Okay, so they have an inverse correlation, and yes, there's a lot of people on crypto Twitter that they do not look at this because they fall into the trap of thinking, well, I don't trade this asset, so therefore I must not, pay attention to it. But if you understand how the markets move, you understand that they actually move from bonds, right? The bonds dictate where the dollar is going to go. The dollar, for the most part, dictates where risk on assets are going to go. And when they are not correlated, right? When we have something like where dollars going up and risk on assets are going up, it's usually a very good sign that the market is changing gears and something big is about to happen. It's one of the most important things that I look at personally to have a good feel for the market. Now, we're not going to go into bonds and stuff like that, but just know that they are very relevant for what dollar is going to do. But we'll take it one step at a time. We'll make things easy. We'll just focus on the dollar. Okay. So let's take a look at what happened, right? And for, I think D&D said that he got fucked up a little bit on NQ. It happens, but maybe we could have avoided it if we were looking at this, right? Maybe being a little bit cognizant. So we see last week we had a really big reversal candle, right? Which after taking out a low, right? So just like we did yesterday, right? Framework first. We're using a weekly ERL swing low, right? Now, that being our key level, we hit a key level, we have a reversal candle closed. Now, we don't get that close back inside candle one, but as we mentioned, right, there are going to be times where that doesn't happen, right? And until we start talking about SMT, where it happens maybe here, but not on, the 10-year bonds or something like that, or the 5 year, we're not going to really be focusing too much on that, okay? So just know though that even though, like for example here, we don't get a candle close back inside candle one here, and then the reversal starts, on another asset, on another correlated asset, it does close back inside candle one. We call those precision swing points, which eventually we will get to for sure. But for now, like I said, we're keeping it very simple. The first thing that we want to do when we hop onto these charts is we want to get in line with the high time frame narrative. Okay, this is going to help us a lot in understanding which direction price is going. And if we can say to ourselves on a general scale that price is most likely going to move up on the higher time frame, then when we move to our mid time frame, it's going to be easy for us to establish and kind of see maybe a market maker model to maybe see if we're on a sell side of the curve, buy side of the curve, whatever the case may be, right? So right now, right, we had this week we had this bullish move up, and if we go and we look at the other assets, right, we can see that this week was down for risk on assets, right? We have candle closures back into candle ones with reversal candles and then moving back. So as you can see, right, we have a bullish reversal candle, we have a bearish reversal candle. So, like I said, being in line with what dollar is going to do and even better bonds, it's going to significantly help you when you're determining your bias on the charts. And this is something that I use a lot, right? Another thing to notice on this chart, right? Maybe we have some equal highs here. No. Let's see, the highs coming in at 100, 360. This is 100, 395. Okay, so we don't have equal highs here. Maybe here though. There is some liquidity. So we have to start looking at the dollar chart and kind of thinking to ourselves, okay, the most likely thing that I think that me personally would happen for here, the way that I would start to frame this is I'm gonna want to take that premium and discount level that we had talked about, right? Cut it in half. Now, any part of the fair value gap that's above here in premium is of my concern, right? This is a premium fair value gap, right? Premium is good for selling. Um, and right now we're moving into that, right? So the most likely thing I think uh, that would probably happen is we probably reject back off of here and maybe go back lower simply because we have this market structure break, right? And like we said, a market structure break is when we close below a candle's low, right? So we close below this low here. Therefore, this should be a high probability premium fair value gap. So we can monitor on the 4 hour. We can start to maybe see when we'll get a nice strong inversion, strong move lower, right? We don't even just want an inversion. We want something that's strong, that kind of signals to us that maybe we have a market maker sell model going on here, right? So does it move into an so it does move into an order block too, right? On the weekly, yeah. The order block in question here would be these three consecutive up close candles, which definitely, right? We can also map that out if we like, if it lets me. Um, we'll leave it off for now, to be honest, just so we keep the chart clean. Yeah, we'll go over order blocks today for sure. Um, But yeah, this is definitely an order block, and it does make it a little bit higher probability, the fact that there's a bearish order block here, as well as a premium fair value gap. So typically, I like to just map out that the most sensitive part of the order block, which is typically the opening candle. Okay, so we'll go ahead, just keep trying to keep our chart real estate very nice and clean. All right, so we'll have this, we'll put it here like that, maybe like that, right? And even if we mapped out the middle of this premium fair value gap, it would line up quite nicely with that order block. So this is why I had said, right, like I'm pretty much waiting for next week. I'm not really a big participant this week because I want to see everything kind of line up the way that I would like it to. So yeah, this is where my head is at right now. Now, if we inverse this, then it's going to be pretty obvious that we're coming up here, probably into this devil's mark and all of maybe these highs right here, this low resistance liquidity. But we would have to see something pretty convincing, like a close above the midpoint or just a full inversion, right? So far for this last week and this week, it makes sense that the dollar was going to move higher, right? And like we just saw, risk on assets reacted negatively and they start moving down, right? So that's what I'm thinking for dollar. Why did you pick that specific high? The one on the far left. This one? I'm looking for areas of symmetry. I'm looking for, um, like if we drop down to the 4 hour and we go look at that high, I know that it's going to be a high even though it's not on the weekly, right? So we have a high here. Look how close that this high is to it. Look how close these highs are to it. So there's a lot of stacked liquidity up there, right? There's a lot of relatively equal highs. Even though they are not exactly equal or perfectly symmetrical, I know that there is a large pool of money above this area, right? So that's why we're kind of going with that one. Okay, any questions on dollar? Um, Not resistance. When we have these areas where um, we have built up highs or stacked highs, I think less resistance and more like a magnet. Like price magnetizes to these levels where there's a large pool of money above to take it out. And then once it takes it out, then I start thinking about not necessarily resistance, but I think about a prerequisite has been filled. One side of the market has been taken out. Anytime a side of a market has been taken out, it gives us that kind of prerequisite that we can start looking for uh, a potential move back down or just targeting opposite liquidity, right? So notice that after we took out this swing low, right, there was probably very good opportunities in this candle and this candle to start going long. So if we were to move above it, this is where smart money is going to start accumulating shorts, right? All of these shorts are getting stopped out. Smart money is just getting in. And then typically we can start to see something like that. But I would not expect really price to move down unless it's hitting a key level like this or like this. We said that we move from IRL to ERL and from ERL to IRL. What about the initial fair value gap that drove price to ERL? Swing low. I mean, that was created a fair value gap 704. Um, where we look January, February, March, April, May, June, July. So we're talking about over here. No, April 7th. This fair value gap here. Okay, so your question is, mm, I mean, this fair value gap did take us to ERL, right? There's that IRL. Here's this ERL. So what's the question exactly? Because we did go from IRL to ERL, right? Yeah, if I was back over here in time, I would definitely, I'm mapping out all the fair value gaps on this leg down, right? I would be mapping out this one. I'd be mapping out this one right here, right? I'd be looking at all of those. They're high time frame fair value gaps, right? So then we get something like this where we get IRL disrespected, right? And then disrespected again. This is usually a good sign when IRL is not being respected very well. It's a good sign that there's consolidation underway. So that's definitely what all this looks like to me. What's the difference between that and resistance? The difference would be that, like let's look for a nice looking like resistance, I guess. Let's see. Mm, let's take maybe something like this, for example. Resistance is when people are thinking, if we hit this level, they're thinking of it like this level right here is a big line in the sand. Like for them when they're looking at this, support and resistance traders. And if you guys are support and resistance traders, I'm not coming for your neck or nothing. I just this is the way that I view things. Um, they will see, okay, so we hit this level. We rejected from it once. We rejected from it twice. So when we come back up here, we should reject and go lower. I don't think about it like that. I'm not gonna draw a line and say that just because that line is there, um, I'm not going to think that, oh, okay, just because we hit it a bunch of times, something like this, that we have to reject off of it because we don't, right? But what it does do for me is after we take out these highs, now I can start looking for reversal signatures here. And if I get them, right, like this inversion here, then my thesis is solid because it's based off of a key level, right? I'm not just saying, we hit a level that we rejected off of once and twice, so I'm gonna go short. I'm thinking we just took out shorts, right? Now that we took out shorts, one side of the market has been taken out. Now we ask ourselves, who's next, right? And that's when we can start framing trades like this, where the answer to who's next is gonna be this um, sell side liquidity down here, right? These stop losses down here. So then longs get taken out. After longs get taken out, who's next, right? Shorts, right? And that's kind of the way that we try to perceive the market. Yeah, exactly. It's a way of thinking. It's a very specific perspective that we can have on price, right? But anyways, that's for dollar, right? Let's take a look at NQ. Now, one of the small maybe mistakes that I made personally is I did think that we were going to get this high, which on the other assets we did. Um, so it's kind of like it's not too bad, right? I wasn't like wrong, but I did think that we would take out the high on NQ. But we didn't, right? We went a lot higher after we got this candle 2 closure back inside candle 1. We made a big move higher. The minimum target that we use when we're using this candle 1, 2, and 3 sequence is candle 1's high, right? And even the midpoint of candle 1 if we're going to be scalping just this, right? So this last week, we took out the previous weekly's high. We closed back above inside with a super strong bearish reversal candle. Remember what I told you guys that we're going to keep an eye on this, right? We're going to keep an eye on that midpoint of that reversal candle and what happened. That's exactly where we rejected off of. So if we went up here, right, we went on the weekly, we dropped down to the 4-hour. We waited until we dropped into that key level. Let me remove these real quick, right? And then we waited for an inversion. There's our inversion. We can go short here. We can put our stop up here, target 1-to-1, and it offers even more, right? Think probably that offers maybe more than 2R. All right, we can put our stop loss there, and yeah, just a little bit over 2R that's been offered, right? And kind of working with the other stuff that we've been using lately. What kind of market maker model do you guys see here? Let me pull up the schedule. I should honestly just have these like saved on the chart forever. We'll use this one, I guess. If you answered market maker sell model, then you're right. Right? So we can see this original consolidation down here. And like I told you guys, the consolidations are not always going to be perfectly uh, just like a perfect, neat little consolidation that looks like this. Sometimes you will get that. Um, but more often than not, you will get something a little bit messier like this. Like I told you guys, sometimes accumulation looks like that. And yeah, you're right. Sell model exactly, right? We get that consolidation, we get that first move up, we get that move up into that key level, right? And then we get that first move down, get that second move down, right? And then third move down under these lows, the original consolidation, right? So kind of just showing pretty much how you could have traded this move using the concepts that we've been talking about. So now, right, now what I think is we're taking out these lows here, okay? So I want to be cautious of just continuously going short because now we've taken out the other side, right? We took out some ERL here, right? And now we've taken out some ERL down here. So technically speaking, price does have the prerequisite filled that if we can either close back above candle one, or if we can just not market structure break these lows, then we can start thinking, okay, we're probably going to go higher. But if we market structure break this low, or we close outside of this candle, then it's going to be more likely that we may even be coming for this low down here. Um, and that honestly, I would rather see that because really, like we talked about last time, and even if you guys don't care about NQ, I used NQ's chart to call the bottom on Bitcoin pretty much almost every single time, bottom and top. Um, but I'm already starting to think about that yearly power of three, right? And kind of that seasonal tendency chart where in the beginning of the year we accumulate, we move down, right? And then maybe March, April-ish, we start moving back up and target these relative equal highs, right? It wasn't very much different than what we had here, right? Which was last year. Right, we had that consolidation. We had a super fast move lower thanks to the tariff stuff, and then we got a nice V-shaped reversal back up into these relative equal highs, right? And notice we keyed off some relative equal lows. We have some relative equal lows down here. We have some a low right here. So my guess is we'll probably reverse from after taking these relative equal lows, and then we can come into this fair value gap. Um, so that's what I'm thinking long term. I want to wait. This week has mostly done most of its expansion already, so I don't think I'll be trading it. The last opportunity to trade that I saw was taking this candle once high, closing back above, and then today offered good shorts into these relative equal lows, right? So hopefully everybody was able to kind of see that. So for now, I'm just kind of sitting on my hands. Let's see what happens. Price is going lower until we get one of those, maybe a strong reversal candle or a candle closure back inside candle one. But so far, it just looks like it's going lower. So we need to prepare ourselves for that. That right now, the general trend is either choppy or going down, right? Which we can also frame our power of three here, right? We got our accumulation, manipulation, and we're now distributing, looks like, right? Cool. So any questions on NQ? Clear? All right, very nice. Another thing I wanted to mention to you guys, you only do scalps into 15-minute FEG on NQ. Yeah, one of my main strategies is going from daily to 4 hour to 15-minute. And the reason that I'll go to the 4 hour is because the 4 hour candles, and I know that DZ wanted to talk about this a little bit, which is trading inside the kill zones. If you guys don't know what the kill zones are, I believe it's 8 p.m. to 12 a.m. for Asia, 2 a.m. to 5 a.m. for London, and 7 a.m. to 12 p.m. for the New York AM session, 1:30 to 4 p.m. For the New York PM session. Those specific time windows, we know just based on statistics that those are the candles, or those are the sessions, those are the time windows that provide the most volatility, aka the most opportunity to us as traders. Now, if we separate, um, those 4 hour candles into the sessions, right? Where one 4 hour candle is Asia, another 4 hour candle is London, and another 4 hour candle is New York, then we can start to trade with a different kind of precision, right? So we see we have Asia's candle right here, right? And just like when we talked about power of three, right? We know that Asia is typically going to be the accumulation session, right? It's usually going to be the one that doesn't offer a very big move, but it sets the stage for what's going to happen next, right? Because if Asia's high gets taken and then we start to break down, we can go short or vice versa for longs. So then we have London here, right? And we know London to be characteristically the session that gives us the manipulation, right? So when we think about open, low, high, close, for example, we typically think about this as Asia. We usually think about this as London, and then we usually think about some continuation in New York, right? So trading the 4 hour candles, if you're trying to trade in the kill zones, is particularly helpful in my opinion. So here's New York's candle, right? We'll map that out in red, and then we'll drop down to the 15-minute and kind of look at some of the dynamics there. Okay, so we're going to drop down to the 15-minute. Also remember, right, we still have a framework going on here. Right? We have a strong fair value gap. Why is it strong? Because we had advanced market structure breaks in inversion, right? We had two inversions here. And this bearish fair value gap lines up with this bearish inversion, right? So let's go ahead and drop down to the 15-minute and let's take a look. Now, when I'm trading these sessions, right, let's put a box on these so they're a little bit more visible. When I'm trading these sessions, one of the things that I really like to look for is a change in state of delivery, aka those order blocks, right? So we're going to talk about that a little bit. Okay, so these three 4 hour candles, right? This is where I'm usually looking to participate. Now, what I would like to see is after we take out a high, right after we take out Asia's high, I want to see a change in state of delivery. So how can I see that? And remember, at the same time, Asia is candle 1, London is candle 2, and New York is candle 3. Right? We can trade both candle 2 and candle 3, and I'm going to show you a really easy way how. So there are different kinds of order blocks, right? We could do like I don't know what you would call it, like the dumb, like meathead version, which is anytime we see down close candles get closed above, then we count it as an order block, right? And that's going to be like pattern trading stuff, right? That's not really going to be very good um for our probability stuff, right? Uh, but if we can start to add context to order blocks, then we can actually start to grade them and say, hey, this is actually an A plus order block for X, Y, and Z reasons. Now, here we'll go ahead and map out the first bearish order block right there. Let's make it a different color. It looks kind of nasty. Yeah, we'll do red. We'll just take this off and we'll put OB. Alright, so I want you guys to remember this, okay? Because I'm about to tell you what it is that an order block actually is, right? It is a series of opposing candles into a key level, being this 4-hour fair value gap, that gets closed under. As soon as this candle closes, this order block is activated, okay? This is an A plus order block because it's coming off of a key level. Yeah, definitely I can say that one more time, okay? So a high probability order block is a series of opposing candles into a key level that gets closed above or below the series of opposing candles. Okay, so I know it probably sounds a little bit complicated at first, right? But let's kind of break it down. A high probability order block is a series of opposing candles. What do I mean by opposing candles, right? For a bearish order block, we're looking for bullish candles. For a bullish order block, we're looking for bearish candles. Okay, so that's what I mean by opposing candles. So if I see, right, if we go back to the 4-hour real quick, and everybody here that is familiar with IRL, ERL, you know that when we hit this level here, you should be anticipating some measure of a move lower, right? So if we come back to the 15-minute and we see a series of bullish candles moving into a bearish level, as soon as we close below this, the body of this first candle, order block is activated. Okay, and we can see that it did its job right here, right? So as soon as that happens, I can enter the trade right here if I want to, right? And this would be the candle 2 trade that's there. Now there is also, I think, a very tiny inversion here, right? And that's the thing. As we start getting more advanced, you guys are going to see that there is a specific sequence that price does when it creates reversals, right? And the order block is not first, the inversion is not first, uh, but the inversion is earlier than the order block. So as you can see, right, we get the inversion there. If you entered there, I mean, it was a quick move lower, right? Um, yeah, sure. Bullish candles moving up into a bearish key level. Okay, we'll put pink, right? That get closed below. So these three are the order block. An order block does not just have to be one candle. Okay, they can be multiple candles, right? A bearish order block can also, or a bullish order block can also be multiple candles, right? It could be 1, 2, 3, 4, right? So as soon as we get bullish candles into a level that we're anticipating to give us some resistance or some bearishness, we're paying attention to that, especially because we're in candle 2 right now, right? Now, let's just say, right, maybe we can use our replay tool here. Here, let's do this so the visuals are a little bit better. It's the wrong one. 1 second. Here we go. So here we have the 4-hour candles, right? We don't have to trade this one. In fact, the easier one for us to trade is going to be this one, okay? Now, When we move into a key level, right? Check it out. This order block here is a key level, right? So we're going to do the exact same thing. The series of bullish candles that move into the key level, which is this order block here. Maybe we should change colors, turn it to black, right? As soon as this gets closed below here, right? This is the candle that closes below it. This one doesn't close below it, wicks, right? As soon as we close below here, this is now an order block. Okay, and look at what happens. We close below it, we come back up, we touch it, and then we go lower. Does that make sense? Yeah, it definitely can, right? And the reason that this order block is a key level, right, is because it's also coming off of a key level. This order block isn't just any order block, it's an order block that was formed off of a 4-hour fair value gap in a bearish market, right? When London finishes, right, and candle 2 is closed and it looks like this, we know that when we close back inside candle 1, there's a very high probability that that we could potentially go lower now that we've formed a swing high. So when I get into this candle, right, this part of the wick right here is this. Almost always you're going to be able to find an order block in the upper part of the wick, right? Does that make sense to everybody? So we can look at some other examples, okay? Let's see. So take this for example, right? We're on the daily here. We get a move lower. I want you guys to remember this because it sounds super like cliche and obvious, but you would be surprised. Buy low, sell high. That is the entire premise of that is the entire premise of what premium and discount does for us. If we're in premium, we don't really want to be buying, right? If we're in discount, then okay, we will, right? So when we take out this low, right? This is a bearish candle into a key level, right? We close above it on this candle. So now this becomes an order block. Okay? Let's look for another example. Let's use this one. I'm not sure. Did we just use this one? No, we didn't. Okay, cool. So once again, the 10 p.m. 4-hour candle is the Asia candle, right? This is how I want you guys to interpret it. So we get the Asia candle here. Okay, so we'll put C1. We'll put an A for Asia. Put it on the top. Okay. We'll do candle 2. Candle 2 is going to be London. Candle 3 is going to be New York. Okay, so keep this in mind. Keep this visual in your head. This formation of a swing high, right? Coming off of this bearish daily inversion, right? So remember, we always have to have that framework in there. If not, then it doesn't mean much to us. Okay, so we're going to drop down to that 15-minute and let's take a look. Okay, let's go ahead and draw those boxes on there as well, just so it's visually appealing for us. We'll make Asia purple again. We'll make London teal and we'll leave New York red. Okay, so once again, guys, the reason that I emphasize swing points so much is because the start of every single significant move starts with a swing point. Every single one. You don't believe me? Go look on your charts. Okay? So it's in our best interest to get extremely familiar with what goes on in those three candles that form said swing point, right? So once again, Asia is usually what, guys? The accumulation, manipulation, or distribution? Who can tell me? Exactly. What's London? Okay. In New York? Perfect. You can trade the manipulation, right? We can do exactly what we just said. What are the prerequisites? We have to hit a key level. Bang, we hit it in Asia. We also hit Asia's high. We took out Asia's high. That's also a key level. The session highs and lows are key levels. You can create a whole model off of that, right? So what are we looking for? Who can tell me what we're looking for in London? Yeah, an inversion for value gap is one correct answer. OB, exactly. Now, here's a little bit of a scary terminology term. It sounds kind of crazy. Change in state of delivery. This is the fancy way of saying creation of order block and change of program, whether it be sell or buy. Okay? So when we take out Asia's high, yes, I can look for the inversion, right? There's the inversion right there. We enter here, we put our stop loss there. We can target Asia's low and we can target any other relevant liquidity lower. We can do that. But since today we're working with order blocks, I'm looking, what's the key level here? Other than the daily inversion for value gap, it's Asia's high, okay? The reason that we're using Asia's high is because it has that context. It's not just any high, it's Asia's high, it's session high, right? So we're looking for those bullish candles into a key level, which is candle one's high, right? AKA our manipulation. How can we tell that the manipulation is over other than the inversion is with the order block? Okay. As soon as we close below this line here, as soon as we close below it here, this is now an order block. This entire thing right here. Okay? Make it black again. Right? And check it out. If we don't trade candle 2 because most of us, well, actually I don't know if most of us are up during this time or not. If you guys are up during London, then most of the time you're going to be trading these candle 2s. But if you're like me and you live somewhere where you're probably going to be up for New York but not really London, right? I'm using the order block in candle 2 to trade candle 3 and I'm waiting for the exact same thing. Let me hit a key level. What's the key level I'm looking for us to hit? The key level that's being hit is this London high probability order block. You can use the wicks for order blocks, but That's going to be like for a more advanced discussion of the different kinds of looking order blocks. Which ones are you going to use the bodies and the wicks for, stuff like that. We'll get there. But as you can see, right, what am I waiting for when we hit this key level? Yeah, we could look for an IFEG. What are we working with right now? OB, exactly. AKA, if we want to be fancy, we're looking for a change in state of delivery, aka the creation of an order block, right? We get up close candles. These two up close candles, they don't touch the key level. These two up close candles, they do, right? So as soon as we close below, we get our order block, we retest it, you enter, stop loss at the low. You can target this low, you can target Asia low, this low, right? All the way down to relevant liquidity. Okay, so both in candle 2 and candle 3, there are changes in state of delivery that we can use to trade if we want to trade on something like the 15-minute. Does that make sense to everybody? Right? We're looking at what do candles 1, 2, and 3 look like on a lower time frame, and how can we get in? That's what we're looking at. Any questions on this? No? Does everybody got it? Okay. Which part don't you get? CISD equals the creation of an order block, right? And creation meaning that we close above the opening or we close below the opening of the first candle of this series, right? So if there's 1, 2, 3 candles, I'm going to the first one. I'm looking at the open of that candle. As soon as that gets closed below, it is now an order block. So yeah, if there's something that you guys don't understand, tell me and I'll be more than happy to go over it. That's fine too. If you want to rewatch the stream, you can do that also. I can see why that's a part of your process because anytime we do create a fair value gap, that's indicative of we've had expansion, right? Which these ones, right, they do create order blocks, right? Maybe not this one. This one doesn't. But this one for sure does, right? But yeah, I can understand. CISD is the actual process of it getting formed. So for example, um, when we close below the opening here, that is a CISD. The main difference between the two is I can enter off of a change in state of delivery. I could enter right here in the same way that if I was using an inversion, I could enter on the creation of the inversion, or I could enter off the retest, right? I can enter off the retest of the order block, or I can enter on the actual change in state of delivery the moment that the order block is actually confirmed and formed. And yeah, we'll keep working with the order blocks. This is a new kind of price signature. We didn't spend too much time on it last time. Uh, Everybody here seems to be pretty comfortable with swing highs, swing lows, and also the fair value gaps. So this is something new. You know, we haven't spent a lot of time on it. So if you don't get it right away, don't worry. That's part of the process. Okay, so for the last 4 minutes, we could just take a look at BTC and we can talk about our thoughts. So for those people that were wanting to get long, like I told you, the only way that I'm gonna get long is if we change in state of delivery these down close candles. But did that happen? No, we rejected off of this bearish order block here, as we can see, right? We tapped into it, right? We could have done the exact same thing. We're waiting for a series of down close candles to get closed below, or even just one, right? Here we go. We close below one. We can use this one right here. And there's our order block. We could have traded into this low. Since the last candle before we short is close below the wicks of the green candles, we know to short based on info provided on order blocks. I'm not sure if I understand the question completely. We'll have to see like an example or something like that. Or maybe we can hop on a call after. Let's see. But yeah, so Bitcoin still looks like it's going lower. I do think, you know, this market structure break is so nasty. So if we do move back into that, will probably be good for shorts. If we don't sweep this low over here, then I'm gonna be of the opinion that we're going down here to the 60, 64K area, right? And then we can start looking at this as maybe one really big market maker sell model. Even honestly, there is a chance that we come all the way down here to 48K, which would be pretty insane. But yeah, still bullish. I mean, still bearish. Bitcoin, we've been bearish, right? Nothing on the weekly has been telling us to get bullish, right? We've just had candle 3, candle 4, and now even candle 5 expanding lower. We'll save the charts that you guys had sent tomorrow. If you guys want to send more in, maybe something from today's lecture, be more than happy. We'll do it first thing tomorrow. I didn't expect the order block stuff to take this long, but tomorrow we can go over your guys' charts and then come back to the order block stuff and this 4-hour candle stuff. Because honestly, if you guys can get good at trading the power of 3 of the 4-hour candles, you're gonna be really good at trading. All right, cool. Any last questions or anything like that before we start to wrap it up here? All good. All right, sweet guys. Take some time, try and become familiar with this. I know it's new for a lot of people here. It's one of the really, really strong things in my arsenal of trading that I use quite often. So yeah, we look like we got a nice market maker sell model on ETH as well. But yeah, let me know, guys. Always feel free to DM, put in trade ideas, and yeah, we'll get to it tomorrow for sure. Promise. Thank you, guys. Appreciate the warm words. All right, fellas. Yeah, nah, I get you. That's how it is when you're first learning. All right, then, guys. I'll see you tomorrow. Take care. Safe trading. Don't do anything crazy. Peace.